The current focal point globally revolves around the intense conflict between Hamas and Israel, and with the United States' involvement in this war, it has the potential to impact stocks, cryptocurrencies, and financial institutions. It's natural for investors to be concerned about the potential negative repercussions on their investments. While we cannot predict the exact outcome of this war for both the affected nations and our investments, we can explore the ongoing financial developments stemming from this conflict and how it might shape the financial landscape in the future. Geopolitical events and conflicts have far-reaching consequences for investments, including stocks, cryptocurrencies, and banks. Understanding these implications is essential for investors. The dissension between Israel and Hamas is a significant geopolitical event. This conflict comes from complex historical and political issues. As of now, it has far-reaching implications, not only for the people living in the region, but also for global financial markets. The uncertainty and instability caused by the conflict can lead to market reactions. In such situations, energy and defense stocks often gain as investors seek safe investments. Furthermore, assets considered havens such as gold and bonds can experience increased interest from investors during times of conflict. Energy prices, particularly oil and gas, are sensitive to geopolitical instability in the Middle East. Any disruptions in the oil supply chain, whether due to the conflict or its potential spillover effects in the region, can lead to higher energy prices. While the U.S. is producing more oil than ever before, concerns over decreased exports from countries like Iran or Saudi Arabia could lead to higher gas prices for consumers and potentially slow economic growth. The conflict's impact also extends to airline stocks as well. Flights to the region are often temporarily suspended during conflicts, directly affecting airline operations. Additionally, the broader impact of the conflict on tourism and consumer sentiment can lead to declines in airline stock prices, also to the stock prices of some famous Israeli companies. For example, there is an international uproar against Israeli-owned brands as people are boycotting their use. This boycott has led to a dip in the stock prices of these brands. It's important to note that the situation is dynamic, and markets closely monitor developments in the Israel-Hamas conflict, reacting to new information as it becomes available. Coming over to the impact on the crypto world, both Bitcoin and Ether are facing weekly losses. Bitcoin specifically is on pace for a 4% loss, which would end its 5-week winning streak since February. These losses are significant, especially given the cryptocurrency's historical trend of posting monthly gains in October. However, the cryptocurrency market faces challenges, including low volatility and liquidity, as well as rising interest rates, which could continue to impact it in the coming months. Cryptocurrencies are seen as a double-edged sword in this context. While they provide a quick and cost-effective way to transfer funds, their transactions are permanently recorded on an immutable public blockchain. Authorities increasingly use blockchain technology to trace donors and freeze wallets, making it easier to investigate illicit financing. This highlights the transparency of blockchain technology and its impact on tracking financial activities. Many countries impose sanctions on entities or individuals associated with Hamas. Banks need to ensure they comply with these sanctions to avoid legal repercussions. This involves monitoring transactions and accounts to prevent any funds from going to Hamas or other sanctioned entities. During times of conflict like these, there may be disruptions in the Middle Eastern region's financial systems. Banks operating in or with ties to the affected areas could face operational challenges, including closure of branches or ATMs, difficulty in processing transactions, and increased risks in providing financial services. There are also indications of indirect effects on the financial sector. Instability and damage to infrastructure can lead to economic downturns, affecting borrowers' ability to repay loans and increasing the risk of non-performing loans for banks. This, in turn, may affect the overall stability of the banking sector. Apart from all the bad news, we can presume that the market will soon settle once these conflicts are resolved. Note that geopolitical instability alone isn't enough to trigger panic in the stock market. Usually, for the market to enter panic mode, tensions must spill over to involve other countries. Rising energy prices caused by conflicts are a concern, as they can lead to a slowdown in the economy. A Chevron-run gas field in Israel's closure caused gas prices to spike by about 30% in the past week. These market movements are interconnected, reflecting the global nature of the economy. To sum it up, the U.S. involvement with Israel has a substantial impact on various investment markets. These impacts extend to stocks, cryptocurrencies, and banks. Investors need to stay informed and adapt their investment strategies in response to geopolitical instability. Thank you for watching this video. Don't forget to like and share it with your fellow investors. To stay updated with the latest financial insights, subscribe to our channel and turn on notifications. We'll see you in the next video.